Hi guys and good evening. Welcome to this evening's collab. So what I want to do this evening is just go over through some of the basic foundational concepts that are introduced to you guys in your Learning Unit 1 and Learning Unit 2, just to help you get a bit of grounding in some principles that I know the students find quite confusing as they go through the work, and that's double entry accounting, T accounts, and accounting equation, that sort of thing. So that's what I want to just kind of revise a little bit with you. So hopefully by now you guys have already done some decent reading through your work, and you should already have at least worked your way through Learning Unit 1 and Learning Unit 2. If I remember the pacer correctly, because we are just beginning week 4 today. So you should have had a read through your Learning Unit 1 in week 1, and week 2 and week 3 you should have covered Learning Unit 2. So that's what I'm basically wanting to do, is just a little bit of revision for you then of 1 and 2, which hopefully you have already read through. Hi guys, I see there are some students logging on. Lovely to see you, Kevin and Ronan, and welcome. So remember guys, these sessions are very relaxed and casual, and the whole purpose is so that you have got someone on a live situation to ask any questions that you've got about the work content and anything that you've come across in your assignments so far that you're not sure of. Anything like that at all. Okay, so when I start going through the revision now, I'm going to be sharing my screen, and I'll be sharing a PDF with you just to talk through a couple of things. But if there are any questions, you can give me a shout. You can either type something in the chat box, and then I'll come and check that the question is there, or you can just open your microphone and ask the question live. Very welcome to do that at any time. Okay. All right, so now what I'm going to do is I'm going to go and share my screen so that I can then hop over to the PDF that I want to use. Share audio. Okay, so in a moment, there we go. You should be able to see my screen now. So I'm going to go over here. This document that I'm working from is called a module guide, but it's basically all the information in this module guide you will find on Learn, in the learning units on Learn, or in your textbooks. So this isn't something, this isn't information that isn't available to you anywhere in your resources that you've already got. And also guys, for the majority, 99% of the work that you need for your assignments, for preparing for your exams, for all of your revision and studying, your textbook and the examples and questions in your textbook and the information and activities on Learn is all that you require. So don't worry about trying to find other information. Your textbook is sufficient. Occasionally on an assignment question, there'll be something that you have to do a bit of research, and that's easy enough to do on the internet, not using ChatGPT, but researching and referencing on your own from the internet. But really, honestly, your textbook and Learn, Blackboard Learn, is sufficient for everything that you need. Okay, so you can see here on the screen, oopsie, I just want to put this, is Learning Unit 1, which is your intro to business and bookkeeping. So there's just a few things that I want to go through this with you to make sure that you understand, and if there's any questions that you've got for them. So your learning objectives, remember I've told you your learning objectives you can always find on Learn itself at the beginning of each learning unit if you click through there, or you can find them on your module outline, which is also uploaded to more resources. And they are important because it tells you what the outcomes are that you're expected to be able to be tested on by the time the exam comes. So for Learning Unit 1, you've got to be able to provide a brief overview of the history of accounting. That is one of the learning objectives, so that could give you a bit of a theory question on that. And then in theme 2 for Learning Unit 1, outline the users and the uses of accounting information. That question comes up all the time, so make sure you really understand who all of the users of your financial information are and what each of those users would use the information for. What purpose would each of them require that financial information? It is critical to understanding why we produce accounts in the first place. And then you have to be able to explain a little bit about IFRS, IFRS, International Financial Reporting Standards. Really, I wouldn't worry about that too much. Very important again, and this is for your understanding of everything that we do this whole semester, is illustrate the accounting cycle graphically. So they say illustrate it graphically. I doubt that they're ever going to ask you to draw it, but you will definitely get questions testing your understanding of the accounting cycle, and that's on page 20 in your textbooks. That I want to make sure that you really understand that process, because that diagram on page 20 is exactly what we teach you to do step by step throughout this course. And I'm always surprised when we give students questions on the bookkeeping cycle that they don't seem to understand it, which it's going to make your life so much easier when you get asked different questions if you understand exactly where in that bookkeeping cycle you are working for that specific question. Another one that they love in tests and exams is contrast financial accounting with management accounting. And again, that is important for your understanding. It's in your textbooks, it's on Learn. No problems there. And then lastly, list the various types of transactions that can occur during the ordinary course of business. And the reason that they've put that into Learning Unit 1 is you need to understand what all the different transactions are that occur in a business, because we are going to teach you in this course how to record each one of those transactions. So you need to understand what they are, what the different types that we get, and how we record, because each of those different types will be recorded in a different journal and in its own specific way. So that is important. Some of them sound like you might wonder, why do they want me to learn that? But they are all important. Okay, so first of all, in terms of the history of accounting, all you need to remember here that it is Pacioli who was the pioneer of the double entry system, and this is right from paragraph 1. You must understand that the whole recording process of accounting, because all accounting is the recording of transactions that have already taken place in a business. That's what we are doing as bookkeepers and accountants. A transaction takes place in a business, we record it. And the method of recording is called the double entry system, which I'll talk a little bit more about later. So way back in 1494, this is where this double entry bookkeeping was originally recorded. But he didn't invent it, but he was the first one who recorded the system that merchants at the time were already using. Okay, so what was the whole start of this? So as I mentioned, it was merchants that first recorded this. So way back in the early days of trade, merchants bought and sold goods, and this is what they were recording. What have they bought? And did they owe anybody money for what they bought, or how much did they pay for what it was that they had bought? And who was buying from them? And had that person paid them yet, or did that person still owe them money, or how much cash had that person paid them for the goods that they had bought? That's essentially where bookkeeping started. So what we are recording is a business needs to account, and that's where the word accounting comes from. We need to account, in other words, make a record for what the business does with all of the money that it's got. So that's exactly what we're recording. What money did we start out with, and where did it come from? And what did we do with that money? What did we spend the money on? So just in simple form, this is what we record. So remember, this is the process of we are accounting for everything that we are doing with the funding that the business has got. So the funding means what money has the business got and what are we doing with it. So on the right-hand side over here, the funding, in other words, where did the money come from that the business has got? So first of all, the owner itself can pay what we call a capital contribution into the bank account of the business. That's what they call these days startup funds. I'm sure you've heard of that. Then the business can get financing by earning an income by selling goods or services or whatever way that they use for earning income. In other words, the actual trade that the business is set up for. How do they sell goods or services to their customers? And the third way that we can get money into the business's bank account is if we borrow money from somebody to use to run our business. So the owner can make a capital contribution. We can get a loan from, it doesn't necessarily have to be a bank. We can get a loan from somebody, and then we can earn income from selling our sales and services. So these are the sources of capital for a business. We put the sources on the right-hand side because, as you'll learn later, the double entry and the T account, the right-hand side of our accounts is where we record credits, and the left-hand side of our accounts is where we record all items that are debits. So these are the three places we can get money from. And on the left-hand side, we are recording what did we do with the money. So there are three different things we can do with the money. We can use the money to purchase actual assets like vehicles and machinery and what else, computers, etc. for the business. We can use the money to pay for our day-to-day expenses in the business, rent and salaries and wages and stationery. Or the money can be taken out of the business by the owner. In other words, he's taking some money for himself, which is called a drawings. And the fourth thing is we can otherwise leave the rest of the money in the bank account. So we know the bank account is actually recorded as an asset. So the money that we've got can be in the bank account, which is an asset. It can be in vehicles, computer stationery, machinery, which are assets. Or we can use them to pay for expenses, or the owner can take some of the money for his own personal use. So these are all the amounts that will be recorded as debits: assets, expenses, drawings, bank account. These are all the amounts that have credit balances, capital contributions, income, and loans or other form of liabilities. Very important, basic, you must understand this. And you can see by this is, I like this diagram because it's really put in simple terms and really makes it easy for you to understand. And it really isn't any more complicated than this. Where did the money come from? What are the sources of my financing? And what have I done with the money? They call it the application. Where was the money applied? So they're saying, yeah, the Franciscan term, so this is also going back to the 1400s. The left-hand side is called debit, and the right-hand side is called credit. So assets, expenses, drawings will have debit balances. income liabilities, and the capital account will all have credit balances. So when this is the very start of our accounting equation, because now we know that the left-hand side must equal the right-hand side to the last cent. Because if the owner contributed 222,050 cents into the bank account, I must be able to look on the left-hand side and see exactly what he did with that 220,000 Rand and 50 cents. It must either be in assets, or I must show that he spent some of it on expenses and that the rest is still in the bank account. But all of that must add up to 22,250 cents. If on the right-hand side I recorded a receipt of 22,250 cents. So the debits must equal the credits. That is the basic rule of accounting. I'm recording two things at the same time. Where did the money come from and what did I do with the money? That's why we call it double entry system. So at any point in time, if I add up everything that's in my assets, my expenses, and my drawings accounts in total, that must exactly equal if I add up my capital, my income, and my liabilities accounts. So as I said, this is the start of our accounting equation. Okay, so I really like this diagram. It really explains it, and I want you to come back to this over and over again to revise debits and credits, debits on the left-hand side, credits on the right-hand side, and the double entry system, which means each transaction that we record, we have to record two things about that transaction simultaneously so that our accounting equation will still be in balance after the recording of every single transaction. And our jobs as the accountants is to make sure that we record every transaction that takes place in the business, between the business and third parties, or between the business and the owner of the business. Okay. Anybody got any questions with that section? Any questions? Ronan, the WhatsApp group for accounting, there is one, and if you go to your announcements, you'll see I posted it there with the link to join the WhatsApp group. So always at any point, always go to your announcements on Learn and just page through them to make sure there's nothing that you've missed. But everything that you need to know, links to all the important stuff, is in announcements, and it's probably also in more resources. I can't remember if I put the WhatsApp group in more resources as well, but it's definitely in your announcements. Okay. All right, so guys, if there's one thing that you remember from this evening, hopefully it will be this double entry system and the basic start of our accounting equation. There's nothing more important that we do in our accounting. Why does that keep coming up? All right, so now let's go and have a look at some other things. Developments in the accounting field. This is in your textbook, and I'm not going to go through that. It's just theory that you guys can read through. Recommended additional reading. There's not really much there. This is Invoice Exchange that they've got in this manual is now one of your Learn activities. In fact, I think that could be one that's one of your ICE. So in your assignment, you've got a couple of questions on the different formats of businesses. So you guys will learn about a business that can be a sole trader, it can be a partnership, or it can be a for-profit company. Those are the three forms of business that you guys learn about. So this question here basically just assists with that. And again, you'll find it either as an activity on Learn or in your textbook. Advantages or disadvantages of starting as a sole proprietorship. So it's really just a question on the forms of business, which is very important because you must understand the three different forms and what the differences are between those three forms. So in your assignment, question 1.1 is basically taking you through that process. And that question will, in 1.1 in your assignment, will test whether you understand what the differences in characteristics are between those three different forms of a company and why you might choose one over the other. I'm just having a quick look through this to see what there was that I wanted to okay, this I don't want. I think it's more when we get to Learning Unit 2. Okay, so remember also I said that one of your learning objectives is the differences between financial accounting and management accounting. So we get two forms of account, different, not forms, schools of accounting, if you want to call them that, financial accounting and management accounting. And again, very important that you know the differences between the two. And most of what we do in this course is financial accounting. Bookkeeping is financial accounting. It's recording of the transactions. That's the basic recording process is financial accounting. Management accounting is when the management take the reports generated from the transactions that were recorded and then make decisions or use those reports to project into the future budgets and other things that they want to do. So at its very essence, financial accounting is the recording of the transactions and the producing of the financial statements. And then management accounting is taking those records and financial statements and using them to produce interesting and useful information for the management of the business to make decisions about the future of the company. So financial accounting involves recording past transactions that have already taken place, and management accounting is all about making plans for the future of the company. Again, this is in your textbooks, so I'm not going to go through that in detail, but again, make sure you do understand the difference between those two things. Okay, so this question was on the origins of double entry accounting, which I've already spoken to you a little about, which is our friend Luca Pacchioli and his recording of the double entry system using the T account. The reason that they call it a T account is just because we have a line down the middle and a line across the top. So it looks like a T. Okay. All of our accounts in what we call the general ledger, and that's very important, the general ledger, are in the form of T accounts. And right at the top center of the account, we write the name of the particular general ledger account that we are recording. So let's say, for instance, it's our bank account in the general ledger. Any time that we record a debit into the bank account, we'll write that amount down on the left-hand side. And any time we record a credit into the bank account, we'll write that down on the right-hand side. And then at the end of the month, we'll add up the debits and we'll add up the credits. And if the debits are more than the credits, we say total debits minus total credits. And the balance that is left is then going to be your brought forward balance for the beginning of the new month. If the credits happen to be more than the debits, then it's the total credits minus the total debits, and your balance will then be a credit balance because the credits were more than the debits, and you write down the balance on the credit side of the account, opening balance for the new month. Okay, but this is what we call the T account approach. And it's, again, it's not any more complicated than this. You write down a form of a T, the name goes at the top, and any transaction that results in a debit you record on the left-hand side, any transaction that results in a credit to the bank account you record on the right-hand side. Okay, and take note, NNB, that is called the collection of all of our accounts, all of our T accounts is called our general ledger. And at the end of the month, when we add up all of the, or not, we don't add them up, we make a list of each account name with its closing balance, and we list them one underneath each other. That is called the trial balance. And the trial balance is exactly that. It's just a report, which is a list of all of the accounts that exist in our general ledger with the total balance in that account at the date that we produce the trial balance. Okay, very important. Pacchioli indicated that where money is concerned, there are always two sides to a transaction. The source of the funds and the application of the funds. And that's why we call it the double entry system. So this is again just a very nice illustration of it, and this is is on Learn, if I remember correctly. Here they have used the excuse me, they've used the example of it was used for churches right in the very beginning, because remember way back in the Middle Ages, churches were huge, and a lot of the money in the entire economy was controlled through the churches in those days, apart from the merchants. So again, source of funds for the church, contributions from the congregation, any external contributions in the form of loans to the church, and then any income that the church generated through various functions, which in today's terms would be the church fates that we have. And exactly the same thing, so that source of funds, application of the funds would be, what did they use those funds, what did they purchase with those funds? They used them for running expenses, and also some of it in those days they gave as donations or grants to the poor or needy. But again, they had to always record what is all of the money that we have got in total, and what did we do with that money. And the books had to balance. So the church had to be able to prove of all the money that they were given, exactly what did they do with that money. So those two sides had to equal each other. So again, we apply money to assets and expenses, and we source money through income and liabilities. So this is the olden days in the church, and assets and expenses, liabilities and income in today's terms of business is exactly what we discussed earlier: capital contributions, loans, income generated through sales. And the application is exactly the same. We'll purchase assets, we use some of the money for the running expenses of the business. Some of the money will still be in our bank account, and then the owner is allowed to draw some of that money. In other words, when the business makes a profit, the owner can take some of that profit then for his own use, which is called drawings. So again, when we are talking about what we call the proprietary accounts, those are the accounts that we use when the business transacts with the owner of the account. Oh, sorry, when the business transacts with the owner of the business. And we only use those proprietary accounts when there is a transaction between the owner and the business, and at no other time. And if the owner transacts with the business, we don't use any other account other than the two proprietary accounts, which are capital when the owner contributes money. So double entry system, we would debit bank account, credit the capital account. And when the owner takes money or goods out of the bank account, if the owner's taking money out of the bank, out of the business, we will debit drawings and credit bank account. So again, we are always accounting for the sources of funds and the application of the funds. Then in your textbook, they've got this whole section here about the how are you going to memorize the rules of double entry? Which accounts get debits and which accounts get credits? So those diagrams that I've already shown you up at the top should help you a lot if you understand the principle of sources of funds and application of funds. I'm just quickly trying to find the page number in your textbook for you where they explain it. So in your textbook, where we are more or less up to now, accounting equation is on page 26. And then on those pages after that, they discuss assets, non-current assets and current assets. And on page 29, liabilities, non-current liabilities, current liabilities. Which is also something that you guys have to do in question 2 of your assignment. Then your accounting equation, they introduce on page 31 and page 32. Excuse me. The business entity rule on page 33 of your textbooks. That is what I've just explained to you now, that when the owner transacts with a business, we use the proprietary accounts, drawings, and capital. And the reason we do that is because we keep the business's assets and liabilities separate from the owner's personal assets and liabilities. That's why we use those 2 accounts to then record any transactions if the owner is contributing something to the business or taking something out of the business. Because the business's assets do not belong to the owner, they belong to the business. So we must keep them separate. And that's called the business entity rule, page 33. And then the proprietary accounts are described on page 38 in your textbooks. And then also a section that you need for your assignment is on page 39, where they describe profit and they describe how we go about calculating profit from these transactions that we are recording, income and expenses. So profit is quite simply all of the income for the month minus all of the expenses for the month equals the profit that we made. That's it in very simple terms. And then this section that I've got on the screen at the moment, where it comes to really getting into the nitty-gritty of the accounting equation, if you go to page 43, they explain something there called the expanded equation. So it's the accounting equation, but expanded. And then on page 45, you've got the description of the T account that I showed you a minute ago. And then on page 46 and page 47, you have got the description of what is on the screen at the moment, which is basically the different accounts that we've already discussed, assets, expenses, and drawings, and capital, income, and liabilities. When do we credit them and when do we debit them? So these are called the rules of double entry. When do I debit assets and when do I credit assets? When do I debit liabilities and when do I credit liabilities? And these are rules that you have to memorize. So when an asset account increases, I debit the account, and if it decreases, I credit the account. For a liability account, when a liability account increases, it must get a credit, and when it decreases, then I give it a debit. For expenses and income, for expense accounts, when they increase, I debit them. When income accounts increase, I credit them. So income accounts increase on the credit side, expense accounts increase on the debit side. Asset accounts increase on the debit side, liability accounts increase on the credit side. So there is something that you can use to that makes it easy to remember this, and this is what I call the dead click. So if you have a look at the left-hand side here, we've got assets, expenses, and the owner's drawings account. All three of those increase on the debit side. So if you remember the word dead, the D in the front stands for debit, and then you've got expenses, assets, drawings. So accounts that increase on the debit side, expenses, assets, drawings. And then on this side over here, we've got liability accounts, income accounts, and the owner's capital account. Those three accounts all increase on the credit side. That gives us the word click. And those three accounts, C in the front for credit, increasing on the credit side, L for liabilities, I for income, and C for capital. So you have to understand this principle that an asset account we must record the amount on the left-hand side if the asset is increasing. So for instance, if I buy a new computer, my T account computers, I must write down the amount that I purchased on the left-hand side because it's an asset computers that's increasing. If I purchase those computers on account, then let's say I bought it from, what's a place that sells computers? Incredible Connection. Let's say I've then got a T account for creditors for Incredible Connection. I'll record on the right-hand side the amount that I paid for the computers. That will go on the right-hand side. Then my accounts are in balance because I've debited computers with 2,000 Rand and I've credited liabilities with 2,000 Rand. So my debits equal my credits. My accounting equation is in balance, and I have recorded the source and application of my funds correctly. So all you need to do then is remember, and always when you're doing, especially when you're writing an exam, write the words dead click down at the top of your question paper somewhere so you can keep popping back and looking at them to quickly remember, okay, I've got to record a transaction now. Must I debit the account or must I credit the account? Then all you have to do is decide for yourself, is the account increasing or decreasing? Identify, is this an account an expense or an income, or is it an asset or is it a liability? And then you will know, does it fit under the dead accounts or does it fit under the click accounts? And you'll know whether to debit the account or to credit the account. So what I was talking about now, which is one of the things you must practice, is you must be able to identify with each transaction the accounts that are involved in the transaction, and you must be able to identify those accounts. Are they assets, income, liabilities, or expenses? If you go to your textbooks on page 53, you've got something there called the chart of accounts. And right at the top of the page, you'll see the accounting equation, assets equals owner's equity plus liabilities. And then underneath assets, they've got them split between our non-current assets and the current assets with a list of the different names of accounts that fall under that category. We call them the elements of our accounts. An asset is an element, an expense is an element, an income is an element, and a liability is an element. So the element called liabilities. And then you'll see under owner's equity, we've got expenses and income, because income minus expenses equals profit. And the profit goes to the capital account, which is the owner's account. And capital minus drawings gives us the total of the owner's equity. And right on the right-hand side of the page, we've got the column for liabilities, also split between non-current liabilities and current liabilities, with the account names that fall under those two categories. So if you keep going back to, if you're not sure, if you've got a transaction and you're not sure whether you've identified the names of the accounts correctly or which category it falls under, come and look on this page 53 and find your account, and this will, and the more you do that and the more you get used to doing it, you'll soon become able to do it without looking at the page. But you have to be able to do that, otherwise you can't record a transaction. If you can't identify the account names and you don't know what category they fall under, then you won't be able to record the transaction. So that is very important that you're able to do that. So guys, I've really covered the most important rules in your learning unit 1 and 2 this evening in what I've gone through with you so far. And I don't want to do any more, because hopefully this has helped you. And you'll be able to come back to this recording and listen to it again if you start getting confused about the double entry system, or when do I debit an account or when do I credit an account, and what on earth is the accounting equation, etc. So hopefully this has helped you with understanding that. Okay. So hopefully this has been helpful for you this evening. Have you guys found it, have you found this has helped you a little bit with understanding these concepts? Okay, brilliant. Thanks, guys. Has anybody got any questions that you want? It can be about the work, it can be about what we've discussed tonight. Anything else at all? Anyone got any questions that they would like me to answer for them at this stage? Remember, you've got messages on Learn, and you've got email that you can send to me at any time. So don't feel shy. I'm here for questions. That's my whole purpose for you guys. So please don't feel bad about asking me questions, because you're not bothering me. Perfect, Kevin. Thanks. Awesome. Thanks, guys. Okay, so I'm going to end the recording now so that the recording is not too long for those that will listen to it later on. And then our next collab is going to be, let me just quickly find this for you, on the 7th of September. So I'll see you again on the 7th of September, and then I will go over more concepts, or maybe I'll do a question out of one of the chapters for you, because I basically covered learning units 1 and 2 briefly tonight, and your assignment goes up to the end of learning unit 4. So on the 7th of September, we'll have a look at something in learning unit 3 and 4, particularly learning unit 3 perhaps, which is your VAT chapter, which I'd really like to discuss with you next time. If there's anything else you'd like me to discuss, please let me know, because I'm very open to chatting about anything in the collabs that you want me to address. So always just let me know if there's anything that you want me to cover. Okay, awesome, guys. Lovely to see you guys online. And then I'll chat to you later. Thanks, Kevin. You too. Bye, guys. Bye, Yana. Pleasure.